This is Satya Pradhuman of Cirrus Research. The latest report of the ETF Looking Glass looks at ESG investing. In this report, we caution that valuations matter as rates rise, that ESG investors need to pay attention here. This is a really neat chart, and it's the cover chart of the report. There's a lot going on, so I'm going to walk you through it. It's a two-panel chart, and what it relates, the upper panel relates the performance of a composite of ESG funds. Here we're using the ones that are most sizable in the ETF marketplace. What we've done is we've looked at their average performance. Now what we've done is put it up against the S&P energy sector. What you'll notice in this purple line is that as the line goes up, the ESG performance is dominant. So pretty much in the last few years, up until about the reopening, which is really the beginning of 2021. And what we've noticed is as commodity prices and oil has surged back, we're seeing a massive underperformance of ESG strategies. So I think we have to sort of step back here and understand embedded in this ESG benefit is also a risk of, betting against commodity prices. So what happens if you're in an environment where commodity prices are higher for longer? And so this becomes a real challenge, I think, now for framing the space. The second panel is just as interesting because what this relates is really the performance of ESG relative to the market. And this is really interesting. It's not an axis line. What it shows is the relative performance of ESG strategies, the one and above, but versus the market. Now, if you came into ESG strategies thinking you're buying protection of some sort, therefore it'll cost, maybe you shouldn't expect to outperform the market. So in this case, you'd be happy. However, if you came into this thinking because you're buying this kind of protection, you should also outperform, this relative performance, at least to date, suggests otherwise. And this is a big deal because if you're entering the equity market in where the investors become more valuation sensitive, and we've sort of attributed this to interest rate risk, then the question is, if ESGs are similar in terms of risk profiles to the marketplace, the valuation risk embedded in the market is now transferred also over to ESG strategies. Super important stuff. I do suspect if we go into a world where commodity prices are not only higher for longer, but in fact they begin to further inflate, then the ESG investor will need to be the devout ESG investor to remain. Take a look at the report. We think there's some really neat stuff in here. We've also offered some sampling of various valuation protected ETFs based on our own analytics. Thank you very much.